Hello, how are you doing? Welcome along to our live stream, our weekly catch-up live stream here at FTUK. Hope you've had a good trading week as always, and the markets have been treating you well. It's certainly an interesting fundamental picture out there, and markets, wow, gosh, yeah, there's so much that you could get into and talk about. There's been a lot happening at FTUK as well. Just checking the payouts before I came on the stream, did all the admin this morning. We've had a good series of payouts in the last couple of weeks, and some great traders as well. We've just this week we did an interview with a guy that we put onto our YouTube channel, one of our now elite traders who has passed the two-step evaluation. It's a fascinating interview, and I want to talk about that in a little bit of detail later in the stream today, because there's definitely stuff that we can all learn from that. Plus, as well, on top of that, I'm going to look at a quick recap of the market. I've got some opinions about the stock market, and I think it definitely can be confusing when the markets keep pricing all-time highs, so I want to talk about that. We'll look at this elite trader that we've got. I can't mention his name, but we'll go through some of the ways that I think, and I don't know for sure, that I think that he is trading, and he's doing an amazing job of handling those two-step accounts. And then we have some absolutely massive news at FTUK. Next week is all going to be about AI. AI is coming to the retail trading industry, and we have an exclusive offer and a bit of an experiment, a test where you can play around with some just the most amazing AI tools that I have ever seen, and that is going to be for FTUK. So yeah, we'll get into all that as well. As always as well, do not forget that we have a Discord community which is now 5,000 members strong, and all you need to do is scan that QR code and you can get access to that. And we have a wonderful moderator who looks after everybody there, does an amazing job. And yeah, get involved in the Discord. There's going to be stuff next week about the AI stuff in Discord as well, so yeah, make sure that you scan the QR code, go over and subscribe. And as you know, plus as well, make sure you subscribe to our YouTube channel. It really helps us out as well, with people are subscribing, doing the notification bells, or hitting the like buttons, or all that kind of stuff. Even leaving a comment as well. I try when I can to respond to the comments that people leave on the YouTube channel as much as I can. So if I've missed your comment in the last week or so, I apologize. I'll get around to it. I've just been particularly busy. Also as well, we have new free trials here at FTUK. This is a new thing that we've been doing. It's proving popular. People are signing up for a free trial. You can do it too. Go onto the website, go up to the navigation bar, and you'll be able to get access to a 100k account, 14 days, completely free. Give it a try. See what you think if you want to try before you buy, Okay, so let's dig in. 50 basis points from the Federal Reserve. I actually thought it was going to be 25, but it wasn't. It was 50. Slightly more dovish for sure. Nothing from the Bank of England, but the pound is bullish. I am bullish still on the pound. I have been for a while now, and I think we are definitely at the start of a bull market in sterling, but no change as yet from the Bank of England. And obviously overnight as well, nothing from the Bank of Japan, although no one was expecting that either. But that Federal Reserve really juicing the market, really putting a mark in the final quadrant of the year in terms of fundamentals. So everybody now knows where the top in those interest rates are. You cannot get over how massive that is, how seismic, and the looming recession, which is obviously most people are signposting now. We are at risk of a recession. You always get, when you start to get the cuts from the Federal Reserve, the yield curve will eventually start to move from an inverted yield curve back to normal, and then that usually signals a recession. So it's in the post, but it's a question of when is that going to be? Everyone's scratching their heads wondering, and the market can keep going. So people pretty much surprised to see those stock markets printing at all-time highs. But there's a narrative around that I think is can when anyone gets into trading, what you've got to do is you've got to have a sense of what the fundamentals do. You will become a far better technical trader when you do that. And all you basically need is some very simple economic arguments to help you navigate direction. Do I want to be thinking to the long side or do I want to be thinking to the short side? That's what your fundamentals will do. It will help you do that. So why are the stock markets priced the way they are priced? Because it's not that long ago when people were saying that was it was all over and we were going to completely collapse. Well, there's one very simple way of thinking about the way that the stock market prices at the moment in relation to what happened with the Federal Reserve. And it's basically this. The whole concept that we've now got a peak in interest rates. See, this in a very basic sense, if this blue line shows you the interest rate hiking cycle that we've been on, that's now topped out. This is the first time the Federal Reserve cut rates. And what that does is it takes some pressure off the bond market. So basically what that means is that yields essentially are going to start to come down. So therefore the bonds themselves, they will start to drop in price. There's not as much activity and capital is always seeking yield. So in that situation, if we have got a peak in rates, what the market is going to start to look to push that capital into a risk asset, into some type of place where the return might be slightly better. Well, what are you going to get better than the bonds? The biggest risk asset out there is, aside from crypto, obviously, and that traditionally has always been the stock market, and that's why you get that. So therefore, when you start to see those cuts, it's actually not that surprising to see the markets pushing at the edges the way that they have been doing. Now, the way that you can get a handle on this is to always think about the events from Wednesday and connect them with the bond market and the stock market, and I'll show you exactly how this works. This is a really good lesson for anyone that struggles with understanding why did that happen. And it's this relationship. You'll see it here. If I bring up my trading view, you'll see it in front of us. So I've got the Dow Jones here, and you can see that price action. This is an hourly time frame, and you see that price action from Wednesday. What's the net result of that cut from the Federal Reserve? Well, we've got the stock market that's pushing higher. That's that capital going in to the market. Compare that now with the US 10-year. Look at the US 10-year from Wednesday. What's the net result of that? Those bonds coming off. So we've got that movement out of the bonds and it's going into the stock market. So you can see it there. Now that's only on a 1 hour time frame and it is only one event. But the point is that relationship is there. You can use that relationship as we move forward into the end of the year. So it's definitely worth keeping an eye on. Now, when we think about the stock market, where are we going to go from here? Well, you know, I actually don't think that we're done yet. Now, I'm a big fan of Fibonacci's, particularly on massive long-term time frames. And I've got this one here on a weekly that you can see in front of you. I actually think that we're not done yet. I love the way that it's been hugging this very, very carefully, and it has worked out really nicely. This is a massive structural weekly swing here before we basically picked up steam and pushed higher. And if we follow the extensions on the fibs upwards, you know, this 2.618 did not hold it at all. And this is big picture. This is the daily time frame, and we can go to the weekly as well, which is, I think it was actually based on. There, you can see it there. So next port of call for me, you know, we could be in a situation of a blow-off move that's coming up now before we get a recession. So that could easily give us a Dow pushing higher and higher here, you know, maybe up to 44,000 potentially into the end of the year and then into January and the first quarter of next year. So don't discount the fact that the market can keep going higher. It certainly can. But where's the buying pressure come from? Well, there's a certain element of the pressure coming in from a movement out of bonds into the stock market. But what you've also got as well, don't forget, particularly from a retail trading perspective, people are always trying to short the top. Always trying to find the top and be the guy that sells the top of the market. And what that does is that they end up being buyers, not in the sense of like getting involved, but in terms of getting out of losing positions. That is a very, very, very strong feedback loop that you always get in stock markets. And I think that's one of the things that will drive us into a blow-off move type situation moving forward. So what do we think is actually going to make the stock market roll over? Well, I personally think it's going to be AI. I think that is going to be the .com type scenario that we had from many, many years ago in sort of 1999, 2000. that era, I think it's going to be the same sort of deal, except it's going to be AI based. And one of the big issues for AI at the moment, and it is going to be a game-changing technology, certainly in financial markets, but it's not been a profitable industry for any of the big companies that have been investing huge amounts of capital into AI. That in itself has not been a profitable investment, and that in itself is going to add recessionary pressures, which will eventually tip us over. But the problem is that everyone is exposed. We have a stock market that's made up of big 7 companies. There's very few of them that are holding the whole thing up. Now, if you move and you look at the actual retail area of the stock market, the story is slightly different. So these big 7 companies, they're holding everything together, and as soon as they start to come off, everything will come down with it. Now, people will say, well, like, I'm not really invested in AS. That doesn't really touch me, and that doesn't really bother me at all. No, you don't necessarily need to be invested in it, because there's so many different routes into investing in the stock market today. It's very hard to avoid the exposure, even if it's only a very small basket of companies. Primarily through things like ETFs. They are a big way that many people just basically just get in and buy and hold for the long term. And those ETFs will have some sort of component that is exposed to that. So there's no question that even if you want to try and avoid it, you're not going to be able to. So it's a question of timing, or alternatively, move your investments out of the stock market and keep it in cash. That's another way of thinking about it. Fascinating times, though, no question. Absolutely fascinating times. Interesting to see where this goes. Okay, so on our YouTube channel this week, we did an exclusive interview with a trader who has just passed our 2-step evaluation. One of the first guys to actually do it. He did an absolutely outstanding job, and there's no question this was not luck. This is a guy who has really been through the ringer. If you've not seen the interview, it's on the YouTube channel for you to watch, but as a quick taster, have a look at this.
I've only been trading for like 1 year, and now I think I found something that works most of the times. I want to know that the prop company is a serious company, that they want to go forward and be there for the traders. Here it's simple and clear. Make your 10% and do your scaling. I like to trade like the 1 minute or up to 5 to 1 hour.
That is a particularly difficult thing to do, and you've made it look really easy.
I know, it's all about making money.
Yeah, he's right. It really is all about making money, and he done an amazing job of passing the 2-step, the evaluation, and then also the verification. And this guy had not had an easy journey. He had a lot of different accounts, and he'd really refined his strategy. It's worth watching the interview. He touches on it, how he trades, and I actually really liked his trading style. And there's a few unique lessons that I didn't quite sort of totally question him in detail during the interview, because normally when you talk to people, you have to go away and think around the edges of what someone's actually doing and where the edge is coming from. But if you watch the interview and then watch what I'm about to tell you, hopefully I'll give you a bit of extra context. He's into ITC stuff, the smart money concepts. That's fine. I'm not a big fan of ITC concepts myself, but it doesn't really matter however you like to carve up the price action, as long as it's making sense and you understand the structure and you can stick to it. That is absolutely fine. He loves the ITC stuff, and he's the fair value gap concept, which is basically, if you've never seen it before, it's just the difference between these two wick points here on this structure here. So it's that gap essentially where you're saying that value is above and below, but it's missing there, so the market's going to return to that area. So he's using that as a kind of like a magnetic point, and he's using various different elements of that and the structure of how a trend is created to help him in getting involved in making decisions. However, I'm not quite sure whether that's totally where the edge is coming from, because if you know, to be a successful trader, your edge is made up of lots and lots of little different things all put together in one go. So that in itself is not enough. You're going to need more than that. So I had a good think about it after the interview, and I thought, okay, where's the edge in this? And it's actually, I think I've sort of got a better handle on it. It's all in the position sizing. And what's clever about what this guy has managed to do, he's tuned his mind into always being flexible in the market. So his basic approach is always to be in the market, and he's either long or short. So in the same way that a parabolic would always tell you if you're not long, you should be short, and if you're not short, you should be long. He's got the same kind of mentality, but he does it in a very, very small, measured way. And what he does is he uses the ITC concepts and the breaks of the structure and the trend to then start to confirm that direction. And once he does, he then starts to pyramid in. So it's the position sizing, the increasing of the position sizing, which then gets over the mathematical hurdle and starts to build a valid trading edge as he trades the accounts. It's absolutely ingenious, amazing approach. So that's why I've drawn these two pyramids on here, these sort of triangles. So if you imagine if you were short, basically, and you got like a break of the structure here, he's looking for the fair value gap. So, he's looking to get involved in the market and then use limit orders and then sell stops to then add to the position as the structure starts to break down. So if that structure then does not break down, he stays with it and he's increasing into it. So as you are short, you then start to increase your size, and that seems to be working for him. The exact opposite, if you're then looking for the bullish case and you get the structural break to the upside, your fair value gaps are then starting to lead you as to points where you're going to get that edge, and then you start to increase in size that way. Really, really interesting approach to trading. And he's one of our elite traders now. He's passed the two-step. He's got a 100K account. He now keeps 80% of the profits from that. Absolutely amazing. So we wish him well, and we're really grateful and glad to have him as part of the community. So if you are interested in it and see if you can join that circle, then please do get involved in the two-step. It's a very affordable way to get access to a lot of capital. You just need to have the discipline, and two-steps, they do tend to create better traders in the long run. Okay, so right, next week is going to be a really busy week here at FTUK. We have the most amazing promotional week. Everything is going to be based on AI. We have some fantastic AI tools for you to have a go with if you want to open an account, a DX trade account. This is all done in conjunction with DX, and I've got a small flavor of it to show you now.
Imagine for a second that you could take any chart from any trading platform or social media post and drop it in a tool that will break the entire thing down for you, telling you what that market is doing. Complete technical analysis done in seconds. You've got to see this.
Here is someone who is talking about like a bull flag opportunity with Bitcoin. So in here, I'm just going to paste in this chart that I found online. What it's going to do is it's going to interpret it. It's going to talk about the flag pattern.
Yeah.
It's going to look at the different targets, and it's going to give you what this means. So in here, it's identified the security. It's talking about the flag pattern, support and resistance, and critically, like the price targets that they're talking about, and why these price targets, are being referenced as part of the bullish case and the bearish case. Like, does it fail to break out? That is the bearish case. Let's jump across to Solana here. Fib retracement, you go all the way down here.
Yeah.
You can come in here and you can analyze this. The Solana, and it talks about the different levels of the Fibonacci that you've given it and the different indicators. And it will start to talk about integrating all of this. So the support levels around the Fibonacci line. Same thing in the bearish case, key levels. We start integrating all of that.
I have never seen anything like this before in the trading industry. AI is here, and at FTUK this week, all DX account holders will be able to get access to their AI tools for 7 days. It's called DVEXA, and it's going to change the way that you look at your trading forever. Click on the link in the description and grab yourselves a big discount.
That guy was James. He is from Tech Signals. They are the company that built this amazing tool. We recorded a big, long podcast style interview, which we're going to put onto the YouTube channel, discussing AI, what it means for traders. And he's the most interesting guy I think I've met in a very, very long time. Talk about clever. This technology that they built at Tech Signals that is connected with DX Trade's AI infrastructure, which is called DVEXA. It's all sort of like connected together. It's absolutely outstanding. It really is amazing. So there's going to be a whole week of information, videos, content, debates, stuff that's going to be online, and we have a promotional offer. You can use the new AI tools that have been built by DXTrade. It's called DVEXA. It's absolutely superb. Let me quickly show it to you. It's not completely plugged in yet because we've only just got it all in the last couple of days. But if you are a DX customer and you buy an account with us next week, a DX account, you'll get access to DVEXA here. It's basically this box here. Now, ultimately, this is going to fit within a widget on your platform. It'll sit on your phone. It will be part of your messaging app, your Telegram or your WhatsApp group, I believe, as well. And it will do all kinds of different type things. ChatGPT for trading, essentially. There's a whole. It's not plugged in yet properly, so I sort of plugged it in before, but the tech guys need to sort of get it all connected over the weekend. But this is a really interesting feature here. This news feed. This is fascinating. It watches how you're trading, and then it looks at the patterns of the types of markets that you're interested in, and then it only serves you the most important relevant information that you need for the markets that you're interested in. So it's a completely tailored approach a completely tailored approach to getting a news feed and a data feed and an economic calendar type information stuff that is completely tailored to you as a trader. I've never ever seen anything quite as smart as that before. There's all sorts of announcements that the broker can do through that, which is it'll do when it's all connected together. And the AI tool that James was just showing me there will be accessible through this window here when it's connected over the weekend. So it really is the most amazing tool I've seen, and to be able to take any image from any chart and put it in there and get it to break down your analysis. I mean, just think of the possibilities. From an educational point of view, if you've never traded before and you're struggling with information overload, you can completely refine the whole thing down. And this will do it all for you. It'll even help you and show you where the key levels are, what you need to be paying attention to, what the patterns are, all of that stuff, all broken down in that window. And if this is, and bear in mind, this is the start. So just think where this is going to be in a year, in 2 years' time. We're really, really lucky to have this at FTUK. So basically, get involved. Please do get, if you've not got an account yet, use next week to do that. It's only gonna be for DXTrade. This is all DXTrade's technology. The DVEXA tool. This is all of their stuff, and we've got a promotion. We've got a big discount as well that you'll be able to click and get access to it. And everyone's going to be able to use this for 7 days. We've got it for 7 days. If it's popular and people like it, and I can't see why they're not going to, then we'll obviously move forward and we'll figure something out. So subscribe your email address, get onto the Discord, just pay attention to the emails. There's going to be lots of videos on YouTube about it and adverts and stuff like that. It's going to be an amazing week, all focused on artificial intelligence. Who knows? ChatGPT for trading. I mean, there isn't a single trader that's not interested in understanding how AI is going to affect things, whether that's from the stock market crashing or in terms of like helping you become a better trader. Wow. That was a lot in this week. That's it. Yeah, really, really, really good stuff. Enjoy your weekend. Thank you very much for joining us. And yeah, get involved next week. We will see you next time.